training session, so to speak, in the pairs mentorship. Now remember, we still have 4 more sessions after this that will happen once a week for the next 3 weeks, and then we'll wait about a month and meet again. And the goal of those sessions is to give you follow-up information and give you a chance to actually be trading this stuff and seeing it in different market environments, and then come up with a list of questions, basically, make sure that you can actually execute everything the right way. So that being said, our next session is going to be next Monday at 5 p.m. Eastern. So a week from today, exactly, is when our next session is going to be. All right. Now that being said, today's session, as hopefully you all remember, is designed to, we're going to go through and I'm going to show you setups, what the market looked like when I was taking trades in the past, so you can kind of get an idea of what the right-hand side of the chart is going to look like when there is an opportunity. And some of them will be using the spread diff, some will be using the spread ratio, some will be using difference and ratio. All right? Makes sense? So that being said, let's go ahead and get started here. You said, how often does the notional value change? If they do, where do we find them? Notional values change every time the price changes. So for example, with gold, one contract of gold is 100 ounces is valued at 100 ounces of gold. Okay, so if gold's trading at 1,200, that means it's 120,000. You do 1,200 times 100. If gold goes up to 1,300, then you'd have $130,000 notional value. So the notional value is always changing based on the price. Make sense? Alrighty, so this was a setup I took. This was from February 17th. And this was RBOB versus heating oil. In this case, what I was looking at was the spread difference. I was saying, all right, we're at an extreme. Now we talked about this previously, or we've talked about this before, how you wait for it to get to an extreme, and then you wait for it to change trend from that extreme. So we went from the extreme up here, and then we changed trend, right? And we started to bounce and roll back over. This was the same thing we were doing with platinum gold last week, by the way, which actually worked out really well. And I'm kicking myself because I took a loss on the trade, and I shouldn't have. I should have made over $1,000 per pair. So pretty frustrated with myself, but story for a different time. But we talked about this last Thursday, how you wait for the trend to change, you wait for the bounce, and for it to start rolling back down. Once that happens, you look for it to accelerate lower from there, right? Well, that's what happened here. I sold RBOB, and I went long heating oil at a 1-to-1 ratio, and this setup ended up netting a little over $500 per pair. Does that make sense? Everybody see why that happened? Does everybody understand what the setup was? So if we go through kind of like the checklist of what am I looking at, first, obviously, I just glance up at the chart, see what's the spread look like, how have they been moving recently. Well, RBOB's been overvalued compared to heating oil. Okay, so I know that we're looking to go short, or I'm looking for a potential opportunity. Then I go down here and I check the spread ratio or the spread difference to see whether or not there is an opportunity. In this case, we go, yes, we have lower highs, lower lows. We just rolled over from another lower high. We're bouncing off of an extreme. Okay, the historical extreme is right up here, which is where we were at. We're pulling back from it. So you take the short in the pair and you ride it down a little bit. At what point are you getting in? I'm literally like this. These screenshots I'm going to show you are literally taken within 2 or 3 seconds of me placing my trade. Okay, so this is what it looked like when I placed the trade. Right there. All right. You said you'll probably answer this, but when do you use the spread difference as opposed to the spread ratio? I actually now I use both of them, but for everything I use both of them except for bonds. And bonds I just use the difference because of how highly correlated when I'm trading above spread. I look at the spread difference because that's just how highly correlated they are. The ratio doesn't really matter as much. How much heat are you willing to take? Again, I'm willing to risk around $500 per pair. The real way I determine, I mean, I say that, but that's not necessarily true. Determine whether or not I want to be in the pair still or not is if I look at the pair and I say I'm down on it and I go, if I close this trade, if I wasn't in it and I wasn't at a loss, would I want to initiate this position again? In other words, does the setup still look good? And then if the setup still looks good, I'll stay in it. If I go, I wouldn't want to be in this, then I get out of it. You know what I mean? That's how I determine whether or not to stay in it or get out of it. All right, let's look at the next one. Same thing here. This was taken, same trade, or traded the same day. This is crude oil versus Brent crude. Oh, and that last trade and this trade. So the RBOB versus heating oil pair, that was on a daily price chart. This one's on a daily price chart. Both of those trades lasted 4 days. Okay, so I was in each of these for 4 days. This is crude oil versus Brent crude. All right, on this one ended up netting just under $320 per pair. All right, and same sort of scenario. Brent crude and crude oil are both very highly correlated. This was just a downtrending market yet again. We had bounced and we had started to roll over. Okay, see how we had started to roll over there? And this is, by the way, these are taken at the end of the day, so I'm not expecting a whole lot more movement from these. So it's just getting in them and saying, okay, it's closing, turning over from here. All right, so ended up jumping into this, holding it for 4 days, jumping back out at just under $320 per pair profit. Now these are off of daily price charts. All right, this is from 2/17, February 17th. Both of those were taken from February 17th. All right, the next one in this case, this is all right. Yeah. Oops. Crude oil versus heating oil. All right, and this one, this is crude oil versus heating oil. All right, once again, just looking at, this one's not a trend trade, this is a counter trend trade. So what I was looking at was, we were in this range right here, and I got in a little bit early, but what I did with this pair is I ended up, so I sold it here initially. All right, the very next day, I was down slightly and it was up near the upper end of the range, so I added to my position. Okay, 4 hours later, by the end of that day, so the next morning I added, by the end of that day it had dropped back down, and I had made 210 per pair on the original and 377.56 on the add per pair. Okay, so initial trade was placed 221, added 222, closed the end of the day 222. It's on a 60-minute, or this is on a daily price chart. Again, just catching this drop down of the range. This was one of those mean reversion trades where we look for it to go up and get to an extreme and then turn around and start to come back down again. By the way, at the end of the session today, I'll send you Andre's notes from the last time I did this mentorship. He took some really good notes on this as well, like he did with the other things. Now this is one. This next one is a losing trade, and it was. I'm sitting here looking at it going, wow, Thomas, you're an idiot. That wasn't a good setup. Don't know what I was thinking at the time. But in this case, I don't know what I was thinking. But does anybody know why this was a bad trade setup? This is on daily. This is RBOB versus heating oil. This was taken on 222. And I ended up losing $3.39 per pair on this. I stayed in it for 4 days. The reason this is bad is because, remember, what do we look for? We either look for it to be at an extreme. So where's the extremes at? Well, the extremes are way up here. Okay? Way up here. We're not near an extreme. Or we look for a trend trade. And when do we initiate the trend trade? After it's bounced and started to go back down again. In this case, I'm selling it as it's bouncing, and this just continued to climb up like this and took a loss on it. I should have waited. What I should have done is waited for this to roll over and then initiated the position so that it was trending lower, and then we get in right here as opposed to as it's climbing still. And again, this just wasn't a good trade. It shouldn't have happened. All right. Next one. Made 285 per pair, roughly. Yep, I traded the wrong side of the mountain. Manuel, you are 100% correct. 225 per pair. Okay, so what's happening? Trend trade. We changed trend. We started to roll back over. As you can see right there. Sold crude oil. Bought heating oil. We're bouncing off of on our spread difference. We're coming off of an extreme. We just bounced off it, and now we're rolling back over here. And I was in that for 3 days. That was based off a 60-minute price chart. And what I did with this, I don't know what I'm saying there. But either way, ended up working out fairly well. Not too bad of a trade. Once again, the difference between this one and the last one is this one I waited for it to start rolling back over before I jumped in. The other one, I jumped in before it rolled over. By the way, I'm just going trade by trade so you guys can see how these work. This is the next one. This is crude oil versus Brent crude. Crude versus Brent crude, typically a pretty highly correlated market. Ended up, this is on 227, and ended up in the world. I'm missing this trade for some reason. Why isn't this in my trade log? I couldn't tell you, so I don't know how I ended up. The next trade would have been crude versus heating oil. This was a small loss, $100 or $160 loss on the pair. $160 loss on the pair. What I was looking at here, it's not necessarily a bad trade. We were at an extreme on our ratio, at an extreme on our difference, bouncing off of the extreme, I should say, on our difference. I was looking for it to break down. I I got in, got right back out pretty quickly. Ended up taking a small loss, 166 per pair. Overall, I'd take the trade again. It wasn't a bad setup. Next opportunity. Crude oil versus heating oil. Well, this was a big loss too. And the rest of them are gains. I had 2 losers in a row here. Whoops. Right there. So here's the first one. This was a loss. Again, not a bad trade overall. I'd take it again if I had the opportunity. I was at an extreme. I was looking for it to roll over. I probably should have just been more patient with it, to be honest with you. Got out of it a little bit early. It ended up coming back together fairly well. And then the next trade was crude versus RBOB, which was a $465 per pair gain. March 6th, crude oil versus RBOB. So in this case, once again, not a bad setup. We had gone all the way up to an extreme. We had bounced off of the extreme on the spread ratio. We were then selling off from it. RBOB was lagging behind crude oil quite a bit. Went short crude, long RBOB. Like I said, took out. And with this trade, I weighted it to the downside. I had a little bit more of a weight to the short side than the long side. Ended up taking out $465 per pair. In my notes, I have out way too soon, which means if I remember correctly what happened here, is this ended up coming down and breaking through the support right there and just dropped like a rock. Okay, but I covered when we got down to that support, which wasn't really that far off. And let's see. Next one was $200 per pair. This is crude oil versus heating oil. And once again, I have marked down here, weighted to short side due to daily breakout. So at the time, there was a breakout, a short breakout happening. So I took more short. I weighted my trade to the downside with more heating oil shorts than I had crude oil longs. And really what I was doing with this trade, I remember this one, is I was long crude oil, short heating oil, because we were bouncing off of support and our difference was at an extreme. But I was waiting to the downside because this was when we had broken out of all this consolidation up here. We had broken down, had bounced, and then had triggered a bear flag. And that's why crude oil had accelerated. Heating oil was doing a last kiss, and heating oil had just popped up, run into the resistance, and turned around. Okay, I don't know if you can tell what that bar did. That bar went up, down, and it closed like that. All right, in this case, I was long crude oil here and short heating oil here, and I was weighted to the downside, so I had 5 extra contracts short heating oil at the time. Okay, ended up taking out $196 per pair. Everybody see what the trade setup was, though? Everybody understand how we were bouncing off of the support? We were at an extreme on spread diff, on support, on ratio. Any questions so far? The next one is a gold-silver pair, and it was short gold, long silver. Ended up taking out This one was a little over $300 per pair. Again, this is just a trend trading pair. Silver had accelerated much faster than gold. Went short gold, long silver. Again, overall, trend was moving lower. We had bounced and had started to roll over. Up and had rolled over just a bit. Was just looking for it to come down and test the support down here. Ended up, like I said, taking out 301.86 per pair. That's after commissions and everything, by the way. All right. Next one was soybean meal. It only made $60 per pair, so it wasn't really the best setup. So I'm just going to skip over it. Actually, it wasn't a bad setup. It wasn't a bad setup, just didn't make that much money on it because I got out of it too soon. In this case, I was looking at spread ratio sitting on top of support here, bouncing off of support. Spread diff was at an extreme. We were at all-time lows. Soybeans had accelerated quite a bit more than soybean meal had. Sold soybean meal, bought soybeans. Like I said, took out 60 per pair in this case. What does the future indicator do? I'm not sure what you mean, Manuel. I'm not sure what you're referring to, future indicator. The next one was a crude oil versus RBOB pair, yet again. This is on, actually, excuse me, gold versus silver next. My pictures are not in order. This is gold versus silver. This made $354 per pair. By the way, if nothing else, I want you guys to get out of this. I personally keep a really detailed trade log. You should be doing the same thing with every trade you take. All right, in this case, sold gold here, bought silver here. Why? Spread diff was in a channel. Well, if I could draw a straight line. In a channel, we were nearing the upper end of the channel. Spread ratio was getting close to the highs, getting close to the last time we had an extreme. You can see we had bounced off of this a few times in the past. And then the one time we broke through it, pulled back down. This made $354 per pair. Got out of it a little bit too early. That's what I have in my notes. Yeah, Emmanuel, we're working on that. That's still a ways away, though. I have everybody's names down, though. Let's see. Then I had, this was the crude oil RBOB one. Let me see, my pictures were not in order for some reason. This is crude oil versus RBOB. This one made $321. Sorry, I lost my place in my trade log. $250 per pair. $250 per pair. What happened here? We were at an extreme on spread difference and at an extreme spread ratio. Was just going counter trend for mean reversion. Got extremely low, so it went long crude oil, short RBOB. Ended up working out fairly well. The next one is Dow versus the NASDAQ. This made $200 per pair. This is on March 27th. Oops. March 27th. We are, this one was long Dow, short the NASDAQ. went long the pair. Reason being, we were at an extreme. We had broken, we were at the lows basically on our spread ratio. NASDAQ had jumped through the roof the day before or earlier that day. Dow had barely moved, so went long the Dow, short the NASDAQ, ended up working out fairly well. Then we have gold, silver. Another gold, silver. This is on April 3rd. I got out of this one a bit too soon. Actually, I got out this one. This one would have made a killing if I'd held on to part of my trade. I'm still happy with it though. This one made 448 per pair. Just what I was looking for. Again, at an extreme, we're bouncing off resistance with the spread difference. Silver had rallied quite a bit. Gold was trailing behind. Sold silver, bought gold. It took a couple days for it to move back together, 3 days, and then out of it. Then here's some other ones. So, silver versus platinum. Silver versus platinum, April 12th. This one made 170 per pair. We were at an extreme. We had previously been at an extreme. We had then rolled off from there. We were rolling over here. You can see we had broken down, bounced, and we're starting to roll over. And I was looking for it to come down, test this support down here on our spread difference. Ended up doing just that. Like I said, made 170 on the pair. I closed this trade too soon. I have in my notes, out too soon, wanted to close before heading to the Dallas meeting. So I wasn't going to be able to watch it. And that's why I did that. Now let me show you, I also want to show you some more losing trades. So here's one. This is one I'm kicking myself for. This is one I just told you closed at a loss and shouldn't have. This was on May 11th. Platinum versus gold, May 11th. I got too impatient here, and this trade ended up playing out really well, actually. This is one we talked about that night. We talked about this one in this mentorship when I was teaching mentorship. This was last week, and what it was, we had rolled over from the extreme. We were trending lower. We had just rolled over here, okay? And I got into the pair, and what ended up happening is this spiked up, retested this high. At one point, we were up about $1,000 per pair. It spiked up, retested this high, and then turned around and pulled back down, and I took a loss on it of 500 per pair total. No, I took it not per pair. I took a loss at $250 per pair. Took $250 per pair loss on this case, or in this case, and then it ended up, if you look at where gold platinum is right now, it's way down here. Would have worked out really, really well if I had been more patient. Same thing with this S&P NASDAQ pair that I closed out this morning and I'm kicking myself for. Don't know what I was thinking. This is S&P. Let's see. Here we go. This was a really good setup. and I don't know why I didn't hold on to it. Like I said, just kicking myself. So it entered a pair here. We were at an extreme. We had turned around and started bouncing back up from the extreme on both the difference and the ratio. So entered a pair here. It ended up trending down a bit more. And at one point we were down, I want to say 400 or 500 per pair. And this ended up rolling back around, and right now it's all the way up here. And it worked out fairly well if I'd been more patient. Ended up taking a loss of $100 per pair on it because, to be honest with you, I think what it was I got scared out of it. Didn't follow my rules. So if that tells you anything, follow your rules. I want you to learn from my mistakes. That's why I'm trying to show you these. And the current pair, the current spread I'm in right now is soy versus soybean meal. And I'll show you what that looks like here. This is soybeans versus soybean meal. And I am short soybeans and long soybean meal. Reason being, we are bouncing off of resistance with our spread ratio. Actually, we're right up against resistance right now. The spread ratio is still right up here. We're down slightly on the pair at the moment. A little less than $100 per pair at the moment. And now we're looking for this to turn around and start to roll back over and retrace back down to the lower end of this range. First support it'll run into is going to be right here. Second support we're going to run into is going to be all the way down here. And I'm looking at taking 1/2 profit, or I should say 2/3 profit on that first support. I'll let this last third run for the second support level. What I'm looking to happen here, now this is one that you could be waiting, in my opinion, you would wait this to the downside. The reason being, and I didn't do this yet. I'm not waiting my trade yet. But the reason would be because you have this bear flag with a shooting star after the support break in soybeans. So you're essentially trading this downswing. So what you do is you would add a couple contracts on your soybean side, depending on how many pairs you're trading. Add a couple contracts on the soybean side to catch the acceleration to the downside, and that way, as long as soybean meal take a nosedive like we would look for them to do, then that would trigger. Okay, any questions? On your pairs trades, what futures do you have as the first in the ratio indicator, and what is the lower? So if I'm looking at, in this case, like if I'm looking at gold platinum, then it's going to be gold first. Whatever the first one is up here. However I read those pairs to you, that's the order that they're in. Okay. Any other questions? So TOS allows you to trade the continuous contract. Do you need to change the symbols to match each specific contract month, or will the chart trades work the same other way? Change them to match each specific month. They will not match if you use a continuous contract, because again, it's plotting it based off of the starting point. And if you're using a continuous contract, it can start way, way back. Makes sense? When you're in a pairs trade, do you watch it constantly the whole time you're in it? How do you handle holding a position overnight? I mean, I watch it. I don't wake up in the middle of the night checking on it or anything. But whenever I'm in a trade, I'm watching it. I wouldn't say I'm constantly keeping an eye on it, though. Because it's market neutral, I don't mind. I hold pairs overnight all the time because it's market neutral. I mean, for example, the soybean meal trade I'm in right now, I'll be holding that overnight. All right. Any other questions? So, do you update the notional values before each trade? No. I mean, I update my notional values maybe once a week or once every couple of weeks. They shouldn't change all that much. I mean, they shouldn't change enough to change your ratios. Put it that way. Unless something happens where one market just takes a nosedive or that one market rips through the roof and the other one just doesn't move. Does that make sense? All right, so your homework for today or for this week, because our next session again is going to be next Monday at 5 p.m. Go through, start looking for some opportunities this week so you can start to get the hang of it. I want to see some trades being placed type of thing. And then we'll take it from there next week, see what you guys come up with, see what type of setups you guys come up with. Okay? So I will see you all bright and early tomorrow morning in the trading room. Have a great rest of your evening. And until next time, happy trading.